Welcome to our podcast this week. Hi, everybody. My name is Jason MacGregor. I'm the co-owner of MacGregor Wealth Management located in Saratoga Springs, New York. And today is the February 3rd week-ending market wrap-up. Last week was a good week in the capital markets overall. The S&P 500 was up 1.6%. The Dow was down fractionally at 0.15 on the negative side. But the big winner last week was the NASDAQ, led by technology stocks and small caps, up 3.3% for the week. It's been a really strong start to the year. The January effect is in full effect, if you want to call it that. The January effect, for those who don't know that one, is the old saying, as goes January, so goes the year. It's a rule of thumb. It's not a law of science, so don't take that to the bank. But in most cases, how January goes, so goes the year. For January, the capital markets in the U.S., the U.S. stock markets, S&P up 6%, the Dow was up 3%, and the NASDAQ almost 11% for just the month. Frankly, 11% is a good year. So if you want to call January a good year for NASDAQ, that is absolutely the case. Last week was full of economic data and events. I think the biggest news was on Wednesday. The Federal Reserve announced a 0.25% increase to the Fed funds rate. That was widely anticipated, so no surprises there. The positive surprise were the comments by Chairman Jerome Powell after the meeting when they being the Federal Open Market Committee, admitted or recognized that higher interest rates do put economic pressure on American citizens with higher borrowing costs, and that they were very aware of that. And that they also recognized that some of their previous rates were starting to work. That signaled to the capital markets that maybe there wouldn't be that much more in the way of rising interest rates or that many more rate increases, and the market rallied. However, there's a little bit of cold water doused in the market on Friday. The reason being is that the January job creation numbers came in at a huge surprise to the upside. 517,000 jobs were created for the month. I don't know the exact data of all economic firms, but not a single economic predictor or economic firm that tries to guess that stuff was even close. That was a huge shock to the upside. And again, I feel like a broken record when I say this, but we are in a period of time when good news is bad news. More jobs, lower job openings, more job creations are great if you're out there looking for a job, and that should be a good thing. But what that signals to the capital markets is that the Federal Reserve still has a lot of work to do to rein in inflation. That is inflationary. More jobs created, more hours worked. And the Federal Reserve's target for inflation is still 2%. It's nowhere near there. So market, we had a sell-off on Friday, and some of the weekly gains were given back because, too good of an economy is too much of a good thing sometimes. This week, what we're looking for here is more economic data, or more earnings. Some more major companies announced, such as BP, Disney, Toyota, CVS, Pepsi, for example, to highlight some of the weeks. We're more than halfway through fourth quarter earnings for the S&P 500, and so far they are down a little bit. They're down about 3% from the previous quarter. So, we definitely have some economic slowdown, but the economic slowdown isn't enough for the Federal Reserve to say, hey, our job is done here, and we will no longer be raising interest rates. And that's what the stock market wants to hear. So we probably have another rate increase to come. Time will tell, and stay tuned as we continue with this weekly update series. And if you have any questions or want to reach us, we can be reached at info@mmwealth.com, or you can give us a call directly at 518-499-4565. Thanks for spending a few minutes with me. Be well.
MacGregor Wealth Management is registered as an investment advisor with the SEC and only transacts business in states where it is properly registered or is excluded or exempted from registration requirements. SEC registration does not constitute endorsement of the firm by the Commission, nor does it indicate the advisor has attained a particular level of skill or ability. Information presented does not involve the rendering of personalized investment advice and should not be construed as an offer to buy or sell or solicitation of any offer to buy or sell the securities discussed. Different types of investments involve varying degrees of risk, and there can be no assurance that any investment or strategy will be suitable or profitable for an investor's portfolio. There are no assurances that an investor's portfolio will match or outperform any particular benchmark. All investment strategies have the potential for profit or loss. Past performance may not be indicative of future results. The tax and legal information contained in the podcast is general in nature. Always consult an attorney or tax professional regarding your specific legal or tax situation.